Hey, what's going on everyone? It's Zach from On Cashflow, and today we are talking about the other dependence credit. The other dependence credit can save you a ton of money on your taxes, even if you don't have a child. So most people, they are wondering if they can take the child tax credit or not, or possibly what they can do if their child doesn't meet those requirements. And the other dependence credit is there for you. And it doesn't just apply to children, it can also apply to many adult dependents as well. And you're going to learn all about that in this video. So the first thing that I want to mention is who can take this credit, because that is ultra important. And most likely if you found this video, then you might be eligible to take the credit. So obviously by the name of the credit, you need to have a qualifying dependent in order to get the tax credit, right? And what is a tax credit? Just so we're on the same page. A tax credit actually reduces your tax bill dollar for dollar. So if you get a $500 tax credit, it reduces your tax bill, the amount of taxes you owe, by $500. And is much more powerful than what is known as a tax deduction, which reduces your taxable income. In this case, the other dependence credit is a tax credit and it reduces your tax bill. So now that we're on the same page here, if you do have a child, then you might be eligible for the child tax credit. And so I'd highly recommend that you watch this other video that I made that discusses the child tax credit in detail. Hopefully I remember to put it in one of those little cards that YouTube gives you up above me. If not, I'll also put it in the description below. So if you have a child and you think you might be eligible for the child tax credit, definitely check that video out, because the child tax credit is worth much more than the other dependence credit. But if you do have a different dependent that might not meet the child tax credit guidelines, then this video is for you. Let me quickly list off the most important qualifying features of the other dependence credit. And I'm just going to look at the laptop really quick because it is very specific verbiage when it comes to IRS guidelines that you need to know, word for word and what it means. So first off, your dependent needs to be, either a U.S. citizen, a U.S. national, a U.S. resident, etc. So that's pretty standard when it comes to tax deductions and tax credits. That they need to be associated with the USA. And your qualifying child can be 17 or older in order to qualify for the other dependence credit. Because if you are going to qualify for the child tax credit, they need to be 16 or under in order to qualify. So if your child is 17 or over, then most likely they might qualify for the other dependence credit. But if your child is fully disabled, then there is no age limit. So they can be, any age if they are your child and they are fully disabled in order to qualify for the other dependence credit. Another dependent that could qualify for this is known as the qualifying relative. And actually in some cases it can be a non-relative, but it's just called the qualifying relative. And in order for the qualifying relative or the adult child to qualify for this credit, they need to receive at least more than half of their support from you. Which basically means that when you're supporting them, they need to rely on more than half of their needs coming from you. And that is usually the case with a lot of college students and maybe even some, relatives. Maybe perhaps you have your grandmother living at home and, you're paying all the bills or something like that. And in addition to that, generally speaking, they do have to live with you for more than half of the year. Okay, now that isn't always the case, but generally speaking, that applies to most situations. So those are the most important features when it comes to who qualifies for this dependent credit. That should answer the majority of your questions on whether your dependent qualifies for this credit. But if you still are wondering, well, the IRS has this really cool tool that I will link in the description below that really helps you kind of make sure that your dependent does qualify for this credit. But first, let's move on to what this credit is. So I've already mentioned that it is a tax credit, which means it reduces your tax bill. But another feature of this tax credit is that it is non-refundable. A non-refundable tax credit means that it can reduce your tax bill down to zero, but it can't go below zero. Because if it was a refundable tax credit, then if your tax bill went below zero, you would have a negative amount, and that negative amount would actually be an additional tax refund for you. So in this case, it is non-refundable. So it can only reduce your tax bill to zero and not beyond that. So that's pretty easy to understand, but where do you claim this tax credit? Well, actually, you claim the other dependence credit on the same form that you claim the child tax credit, and I'll put that form on the screen right now. As you can see, it is actually directly on Form 1040, and you actually don't need any attachment for this. And you can see right there where you will select either the child tax credit or the other dependence credit. But that is what you would fill out if you were doing it the old-fashioned way. And I really highly recommend against doing the old-fashioned way and doing your tax returns completely on your own. I actually do recommend using a tax software because it makes things much easier and you're much less likely to make a mistake on that because the tax filing software usually has so many things built into it. And I personally have used TurboTax every single year since I ever first started making an income, and I highly recommend them for you as well. So if you're still looking for something to help you out with your taxes, I definitely recommend TurboTax. I've used it every year. It's been great for me, and I know it can be great for you as well. And speaking of saving money on your taxes, that is what this channel is all about. Saving money on your taxes, investing, growing your net worth, becoming financially independent. Those are many different things that On Cashflow is all about. And if that's something that interests you, then I highly recommend that you subscribe to the channel, because every single week, currently Tuesdays and Thursdays at 3 p.m. Pacific Standard Time, I am putting out new videos on personal finance on many different topics, and I know that there is something that I can help you with. So please subscribe to the channel if that sounds interesting to you. And if you're enjoying this actual video, go ahead and do me a quick favor and give me a thumbs up, because it really helps me out and it motivates me to keep making those videos. But getting back to the other dependence credit, let's talk about why it actually exists. Why is this credit even a thing, right? Well, the IRS doesn't particularly put out information on saying why a tax credit exists. We kind of just have to use our best judgment and kind of determine that for ourselves. So many different tax credits and tax deductions in my mind either have to do with fairness or it has to do with incentives. And I think that this one kind of fills the fairness bullet point. Why should someone that has a child that's 16 or under get a tax credit, but I that have an adult child that still relies on me, why don't I get a tax credit? Or, I'm taking care of a relative that can't take care of themselves. Can I please get a tax break on that amount of money I spent? So I think that this credit particularly has to do with fairness. And now getting back to probably the most important aspect of the credit, and any tax credit for that matter, is how much is it worth? That's probably the number one thing that's in your mind, right? I know it was in my mind when I was first researching it. So the other dependence credit is worth up to $500 per dependent. So, if you have two grandparents living at home and they rely on you for more than half their income and they meet all the other requirements, then that can be potentially $1,000 of a tax credit that you can get for them. And the same goes if you have, say, two kids in college that you are supporting. The same thing goes for them as well. So it's $500 per credit. And remember, it is non-refundable. But there is a catch, of course, as there is with everything in the tax code, it seems like. And that catch is that there are phase outs. So there are phase outs, which means that once you make above a certain amount of income, then this credit becomes worth less and less until eventually it becomes worth zero and you can no longer qualify for the credit. So for this phase out, it is concerned with modified adjusted gross income, which is basically your adjusted gross income with a few other things added back to it. So modified adjusted gross income is definitely less desirable than adjusted gross income, but for this tax credit, it relies on modified adjusted gross income. If you are single, then the amount that it begins to phase out is $200,000. If you are married filing jointly, then the amount that it begins to phase out is $400,000, and that is modified adjusted gross income. So those incomes are actually pretty high, so I think a majority of people do not get phased out. But if you are in that upper tier of income, you might get phased out and you might get your tax credit for this credit eliminated completely. And if you enjoyed watching this video about saving money on your taxes, then I can tell that you are interested in becoming a master of your own cash flow. And that is really what this channel is about. And I actually created a pretty good video about how to achieve financial independence in 10 years. And if you don't know what financial independence is, if you haven't watched it already, it is basically about building the ultimate financial security for yourself. So that video should be popping up right next to me right about now. If you haven't watched that video, I highly recommend that you do watch that video, because if you are interested in this kind of information, I know you're going to be interested in that information. Thank you so much for watching this video. I'm Zach from OnCashflow.com, and I hope to see you next time.